Good morning. This is the option trading playlist video. This is the first video I'm going to prepare about the option trading for beginner. So this video will consist of what are the options, what are the terminologies used, then how to find the options, how to find the terminologies in the website, that is NSE India website. So all the things related to the option trading we are going to see in the beginner guide. So you are going to get the complete guide about the option trading in this playlist. Please watch the total playlist in order to learn the option trading. Let's start about the option trading. The first question is, what are options? Options are contracts that give the holder the right but not the obligation to buy or sell an underlying asset at specified price on or before a specified date. So the options are the contracts. That means there will be some per price and there will be a particular date. So in that price you can buy some asset. That means with the one premium amount, some amount you can, some quantity you can buy some asset, then you can sell it. If the market is supports you, you can get the profit. If the market is against you, you will lose. So that is what the option trading. So the case of specified price, that indicates there is a strike price and premium price. We will see in the next slides. Then in this case of specified date, that indicates the expiry date. So each options, that means each index, for example Nifty, Bank Nifty, Fin Nifty will have a different expiration date. We will see one by one. So in this case of normally trading, we have a intraday for the stocks, then in intraday for the options also. So in this case for trading we can have a options for stock also, as well as in the indexes also. Stock means, for example in the case of Tata Steel, you can do option trading. Moreover, in this case of other option trading is for the index option trading, that is a Nifty, Bank Nifty and Fin Nifty. You can do the option trading. So there is a two kind. One is option trading for stocks, then other is option trading for indices. That means Nifty, Bank Nifty, Fin Nifty. So if you want to do the option trading in stocks, you can find the stocks who is having the option sign, like Tata Steel, Bajaj, then Sri Cement, those Reliance, then all IT industries, IT stocks, most of the IT stocks and banking stocks. That means the Nifty 50 stocks mostly they do have options. So you can do the option trading in the stocks. So the other kind is option in the indexes, Nifty, Fin Nifty and Bank Nifty. You can do the option trading. So before initiating the option trading by your own, it's better to visit the NSE India website, which is the government website. NSE state that National Stock Exchange India. So it's a government website. You can visit the website. There you can find the option signs and other informations. So when you reach the NSE website, so there is a column that is derivatives. So when you click that derivatives, it will take you to the index columns. So there are tables consist of different kind of indexes, including Nifty, Bank Nifty and the Fin Nifty with the different kind of expiration dates. So you can find the indexes. When you click that indexes, you can have a option signs for particular index with the particular expiry date. So you can see the option sign. In that option sign there will be a call option, put option, expiry date. You can find it. So please visit the NSE website first. Then you have to observe such things. That means what is derivative? Derivative means that consists of option trading as well as futures trading. So in the derivative it's have a two kind, that is the futures and options. Now we are talking about the options trading. So future, that is a different category, we'll discuss later maybe. So now we are discussing about the options trading. So derivatives consist of futures and options, and shortly they will call NFO. They will call NFO for the derivatives. So just visit the NSE India website. This is the slide showing the NSE India website. Here you can see the option sign. The left hand side call option, right hand side put option. Please visit the website for more information. This is the image of one stock broker called Upstox mobile platform option trading. Here is the option sign. You can see the option sign. You can buy and sell call or put options by selecting directly. You can do the trade very easily. Next we will see the types of options. Two types, one is calls and puts. A call option gives the holder the right to buy underlying asset, while the put option gives the holder the right to sell the underlying assets. That means if the market is supports you, you can buy the call option. If the market is going down, you can buy the put options. Now we will see some terminologies. Number one, strike price. The price at which the underlying asset can be bought or sold. That means in the website, in NSE website, in the option sign, you can find the strike price in the middle of the option sign. That means between the call and put options, you can find the strike price. Number two, expiration date. The date on which the options contract expires. That is what I told. For example, Nifty expires on every Thursday. Number three, premium. The price paid for the option contract. That means you know that there is a strike price, right? For example, strike price means if the Nifty is trading around 18,000, that 18,000 is the strike price. For in this case of premium means for call option, the 18,000 strike price may consist of call option of 250 rupees. Maybe put option consists of 220 rupees. So that is the premium price. That is the price we are going to buy or sell. That is the premium. Next I will tell you how to trade options shortly. First you have to open the brokerage account. So you can do trading by selecting underlying asset you want to trade. For example, Nifty or Bank Nifty or Fin Nifty or stock. You can select one, you can do trade. Next step is whether to select call option or put option. If the market is going up, select call option. If market is going down, then you select the put option. Selecting the strike price and expiry date in option contract also important when you selecting the call or put options. So how to select the strike price and expiry date we will see in the next videos. And then you can monitor the trade after paying the premium money. So if the market is supports you, for example, if market is going up, you can sell the call option after your profit expectation has been achieved. If the market is going against you, for example, if the market is going down, you can comes out immediately for the call option. So you can take it whatever based on your need and the risk. So thanks for watching the video. You can continue the watching the second videos and third videos for learning the option trading. If you like the content, please do subscribe my channel. Next step is paying the premium money. The next step is the monitoring the trade. If the market is going positively, you can wait and sell. If the market is going against, you can sell it immediately.